Hello, everyone. Welcome. Hello, everyone. Welcome to this webinar today for our ESS BIZTOOLS and ESS BizGrants subscribers. And I'd like to give a special welcome to our special guest presenter today, Paul Barnaby, Managing Director of Beyond Accounting Technologies and the Australasian representative of Plan Guru. How are you today, Paul?
Hi, Peter. I am just great. Thank you very much.
Okay, well, we'll come back to you shortly, Paul, and we'll just go back to this presentation. So what we're talking to you today about is how you can utilize components of the Business Advisory Services Starter Package to provide business advisory services to your clients. The Starter Package is an integral part of the gold and silver packages as well. So that's why we thought we'd start with the Starter Package, and we will progressively build up in this series of webinars, because from September onwards, we're going to be looking at the components of the gold and silver packages. But today we're looking at the Starter Package, and a key component in it is the charge out rate calculator for tradies. You will find it within the industry specific advisory area, and then we have charge out rates for trades, and I'm going to show you those individual documents shortly. We have a paper which I'll also be referring to. It's paper 165010 if you want to access it any time. And the charge out rates calculator is in the Business Advisory Services form 165010 lowercase a. That's where you'll find everything. The key components within this package are, first of all, calculating the labour on costs, because they can vary, and that's been divided into permanent staff, full-time, part-time, permanent, and casual staff to make it easier to set up the labour on cost rates. The system then transfers a significant amount of information out of the labour on cost calculations into the labour budget, and all that has to be added is the individual annual pay rate, the productivity percentage expected, and the number of people in each classification, because the rest of it comes through from the labour on cost form. The budgeted overhead costs, you will have to complete that for your clients, or get that from your clients and put that into the system. The budgeted materials is the calculation of how much money your client expects to spend on behalf of their customers, their clients, in buying purchases for them, and then the markup, if any, that they're going to put onto those purchases for the services that they're providing to their clients. Now, this is one of the tricks in this whole area, I think, for you to be monitoring the calculation of the charge out rates, is to make sure that the rate they tell you is in fact the rate that they mark up, because otherwise the calculation of the charge out rates will be incorrect. So I've had situations where clients have said, oh yeah, we're going to mark up by 40%. And then later on you find out it's really only 15%. That will make, if they're spending $1.5 to $2 million on external purchases, that has a significant impact on the charge out rates, if they've reflected that gain in the calculation of the charge out rates. Now, I know some people don't like doing that. They like to keep this as a separate profit item. They can, but you need to realize that the charge out rates might be a bit higher than what they might have otherwise been. The system goes through what's called the base time costs. You don't have to worry about that. It will do that automatically, and it will also calculate the business overhead factor, and you don't have to worry about that. It's just part of the calculation. And then what you're going to get is the tradies charge out rates, which are reflected based on their pay rates, the hours they're working, the productivity that they expect to obtain, and the projected profit that the business has put into the calculations, that you have had a discussion with your client and said, yes, we're going to have a target of $50,000 or $100,000, whatever it is. You will then have the charge out rates. You can also set up very similar to professionals' charge out rates. Most professionals don't have the markup on external purchases. Otherwise, it's basically the same. What you're going to end up with is the budgeted profitability, which you can then check, and there's a long service leave calculator. So that's the material, which we will be going through a little later. Predictive accounting, a new tool to deliver diversified services to your clients. Last week, says BIZTOOLS, Beyond Accounting Technologies, which is headed by Paul Barnaby, our guest presenter today, and Plan Guru, the USA company that is selling its financial forecast package in 55 countries around the world, launched a product for the Australian and New Zealand markets as a joint venture. The key person in that arrangement is Paul Barnaby. Paul's a fellow of the Institute of Chartered Accountants. He's been the senior partner of an accounting firm, but he is very passionate about this concept that one of the key services that accountants can be providing in this new era of diversified services, primarily built around business advisory services, is predictive accounting. So it's my pleasure to now introduce Paul Barnaby to you. Hi, Paul. David.
Thanks, Peter. Thanks very much. And I'm very pleased to join you today as you talk about an area which I discovered there was a great need in the tradies area for, again, advisory services. But my topic today is predictive accounting. I'll just share my screen and we'll show you what I've got to talk about. Let's get the slideshow going. Okay, so my topic is predictive accounting. And as Peter said, I'm really delighted that we have developed and now released this joint venture between ESS, Plan Guru, and my company, because it facilitates for you those advisory services in what I now call predictive accounting. Because what we want to do is two things. We want to make budgeting and forecasting easy for you, because it's not generally, and we want you to be a real hero with your clients. So what is predictive accounting? Well, it's really nothing more or less than doing for future accounting periods what we're all trained to do for historic accounting periods. We want to prepare future revenue statements, future balance sheets, but more particularly, we want to add that third component, the all-important cash flow, and report those just the same as we report profit and loss balance sheet now, internationally accepted reporting format. And why are we doing it? Well, too often we just react. And when the bank rings up and says this client needs a cash flow forecast, that's when we do it. But it has a far more important role than just a reactionary role just to satisfy the requirements of the bank. Because if you're doing it correctly, it will enable those strategic decisions to be made far more quickly. And that allows unlocking profits, improving cash flow, and all of those things that go towards achieving your client, the shareholder, their targets. And just putting it back into the topic today of charge-out rates, if the charge-out rates aren't being monitored in terms of the budget, how do we know that what we're doing currently is strategically correct? So one of the things that I hope you will understand after we finish today, both Peter and I, that you can look at these charge-out rates through Peter's help of all his work papers and calculators and what have you, arrive at a charge-out rate and then apply it to those future periods with your budgets to show your client, look, if you take your charge out rate from $90 to $120, this is the effect on your balance sheet. This is the effect on your cash flow. This is the increased profit that you will make. Now, how graphic is that? How's it done? Well, it's not easy, as you've probably worked out before. And what we've got to do is use those key drivers. So yes, the charge out rate, hours that we're expecting to charge at this rate, but other key drivers as well. What other revenue have we got? What other costs have we got? Obviously capital items, and we need to use those key drivers and then translate those to the predicted financial statement. So, as Peter said, yes, I am passionate about predictive accounting. It's all I now do. As Peter said, I am a CA and I was managing partner of a second-tier firm. But I've now had nearly 20 years experience in predictive accounting. Now, that includes financial analysis, strategic planning, and of course, budgeting and forecasting. I have my own consulting practice styled Beyond Accounting Technologies. And I'm also, as Peter said, the regional integration consultant for Asia Pacific for Plan Guru based in the US. Interesting little story about Plan Guru. Until about 8 or 9 years ago, Plan Guru was just a little tool that an accountant had actually prepared just for a few of his friends, and suddenly they realised that it had significant economic value, and that's when they turned it into a real business, and as Peter said, now sold in over 55 countries around the world. So I've worked with many hundreds of accountants and business executives, and particularly practicing accountants, and I like to think that my job is to make you look like a real superstar. So you need a budget. What are you going to do? Reach for Excel or Google Sheets these days, right? Wrong. Excel and Google Sheets are great tools, but they were never built for predictive accounting, let alone the intrinsic amount of budget. They were built as a general calculation formula. You know what it's all about. They were built for chemists, for engineers, yes, for accountants, but never for budgeting. And so if your client said, oh, what do I use for my accounting system? Would you say, yeah, use Excel instead of Xero or Maya, QuickBooks? Of course you wouldn't. So why would you use it for predictive accounting when we want to adopt those standards and professional skills that we do to our historic account? And if you really want proof, go and Google a fellow called Ray Panko. He's a real nerdy fellow at the University of Hawaii. And all he does is play with spreadsheets every day. It would drive me nuts. But he's looked at published Excel and other files, and he's found that 91% of them have got errors in them. Now, when I say errors, I mean errors that the authors do not know about. Repeat, don't know they're in the file. I was talking to a Big Four firm not that long ago. They said, we know what you're talking about. We did a due diligence project recently. We were submitted to us an Excel file that was used in some calculations of a discounted cash flow, and there was a $20 million error in it. How embarrassed are you going to be if you're the author of that? The other factor is that Excel takes about 10 times as long to prepare those three-way budgets compared to the purpose-built application. There's a number of them out there, but don't make the mistake of using tools which are complementary. So don't try and use Fathom, for example, for the three-way budgeting. You need a tool like Plan Guru to do it. There are 2 or 3 others that I can think of. Spotlight's a good one. It's a great reporting tool. But again, you need those tools as well as Plan Guru. And just to give you a bit of a sample, we're not going to try and demonstrate what Plan Guru is today, but that's the style of an income statement that you would prepare inside Plan Guru month by month, with totals for obviously for the financial year. There's the corresponding balance sheet, and there comes the cash flow. And just dwelling on the cash flow for a moment, though, when I talk about internationally accepted formats, that's called the direct method of cash flow reporting, which starts from operating revenues You alternatively have the indirect method, which starts from profit and does the add back to operating cash flow. As you will see there, it looks at investment cash flow and financing and comes up with a result for the period and then a rolling cash balance, which goes back to that same figure in the balance sheet. So that's the starter thing. There are other reporting options with Plan Guru, in particularly dashboards, which you can badge with your own logo. As you can see, I put mine up the top here. And this is all very user configurable according to the client's needs. Some clients like pie charts, some prefer bar, some like lines. I've just shown you can do the whole lot. So that very, very quickly is an overview of what predictive accounting is all about. But as a new year offer, because we are early into the new financial year, I'm adding to what Peter does a free offer of having a look at your own practice to see what you have been doing in predictive accounting and give you an assessment looking at things like your staff capability and what training you might have had, looking at what tools you might currently have, looking at using, and then there's the marketing side of it, because this is a whole new ballgame. You're going to give huge value to your clients by doing it. So I'm happy to do that as my free offer. Normally that would be worth around $700 for me to help you with predictive accounting. Peter, any questions or back to you?
No, probably a comment. So, Paul, what we're suggesting here is we're going to be looking now at the process to actually calculate a charge out rate.
Yes.
But what you said earlier is quite correct. We'd envisage that accountants using the Plan Guru predictive accounting concept would then be placing the forecasts using those charge out rates into the budgets and cash flow forecasts and predicted balance sheets. So it's a very important step if we're going to be really servicing clients. And most of the comments we're going to talk about today for tradies, and there's a lot of tradie businesses out there. I'm going to refer to one of our subscribers that's got over 100 tradies, and they're all on this system of having their charge out rates calculated and a few other things. It's also very applicable to professional service firms. And there's a lot of them out there. They're not just accountants and lawyers. There's architects, there's surveyors, there's town planners. There's a whole range of people. So they can be utilizing this calculation concept to calculate their rates, but then they should be implementing the figures into the predictive accounting formats to look at how the business overall is going to go. Okay, so thanks very much, Paul. We might just, I'll just take it back and we will move on there. So I'm going to, so I've now gone to our members area, members homepage, and I hope you're all familiar with this because this webinar is for our subscribers. You've got your individual products. If you're a gold subscriber or silver subscriber, you receive all of these products. The only ones the silver don't get is the access to the separate website for ESS Biz Grants. But the one I'm moving through to is the Business Advisory Services Starter Package. So I've brought that up. This is the bronze package, which we've rebranded. We're having a marketing overview at present, and our marketing consultant suggested we change the name, so we have. So we're calling it the Business Advisory Services Starter Package. As I said earlier, everything we're discussing today is in the gold and silver packages, but what we've got on the screen now is what's included in the starter package. So we've got training material, we've got access to 12 client seminars there. So they're there for you to use now. There's 12 of them. available in the starter package. I find that seminars or webinars are a great way to communicate with a client. When we first started ESS BIZTOOLS 20 years ago, we didn't have the ability to use Zoom. So webinars were, someone was dreaming about them. I don't know whether I even thought about them back then. So we originally developed everything to be utilized as seminars. So you can take your pick these days, but you've got the PowerPoints, the handouts, and other material in the system. You've got 343 of the papers we've written on a wide range of subjects, about 60 different subject headings. We've got some client mentoring and coaching modules. You've got access to 4 of those. And the purpose of those is that you will communicate over a period of time. Now, whether it's weekly or fortnightly is your call. You know your clients. But the reason we developed that material was to help you to educate your client on the types of services that you can now provide. I think you have all got to remember that many clients know they need additional services, but sometimes they don't really think about their traditional accountant because they think all you're interested in is taxation. And this is one of the challenges I think accountants have got as you look at diversifying your services. And that's what we're encouraging you to do, of course, is to make sure you bring your client with you, you communicate with them. And that's why we developed that package. You've got 4 of those. You have the Business Plus newsletter, which we produce each month, and we would hope that you would see that as a key marketing tool, that you follow up your clients, you talk to them about the articles that you think might suit them, and try to get them to understand that you can offer a broader range of services, and then you can sit down and give them a proposal. Debtors Management is what we considered last week in this series for our subscribers. It's a whole series of questions and forms to help you analyze how good their system is. Survival in Difficult Times is 38 questionnaires looking at a whole range of activities within a business. And then there's material, there's papers linked to those questionnaires whereby you can supply suggestions to your client as to what they should do about a poor gross profit or whatever the problem that's emerged. And then we have industry specific, and I'm going to come back to that in a moment because that's where we're going to today. We have the Debtor Systems Manual. So that's a template of a manual, a 41-page manual that you can customize to suit the client's particular requirements when it comes to debtors, so that the person, and I call them the poor person, who's sitting there trying to run debtors has got a proper typed written system instead of some of the systems that I've seen over the years. And they tend to be hand-me-down notes that someone might have first written 15 years ago, and or there's stickers on the sides of computers or filing cabinets or desks. That's not the way to run a system. So we have a system there that you can personalize and sell that service to your clients. There's also some leadership modules. The starter package gets access to 4 of those, which you can use. And some of our subscribers have actually used the knowledge that they gleaned from using the leadership material to actually run training courses for clients on leadership. So that's an interesting way. What I want to go now back to is the industry specific advisory. So let's go there. And this is the area that we've included the packages for fee setting for trades and manufacturers, calculation, fee setting for professionals, and setting retail prices or wholesale prices calculator. Today, we're looking at the charge out rate for tradies. So let's go into it. And hopefully that bit of a cook's tour then has just given you an overview. If you weren't particularly sure where these things were, that's where they are in your system. And remember, if you have any questions on any aspect of ESS BIZTOOLS, please send us an email. We really want you to be using this material. Your firm's paying for it. We want you to use it so that you can really claim this space of being one of the leading firms on business advisory services. I'm now going to go to, first of all, the paper, which is in the system. And this paper has been prepared that you could badge this and send it to your clients. So hopefully you can see that. I'm getting told you can't. So I think yes, I did something. Just a moment, I missed a step. If you start doing these webinars, you realize you've got to do things in order. And I didn't then. And that's now mucked it up. I'll just refer to that paper. If you can please look at it, that's Setting Charge Out Rates for Trades. It's a paper that you can go through and talk to your clients about. It takes you through every step of the process and gives you a complete overview. The forms that I want to bring up, though, is the calculator. So you should now have the calculator on your screen. You will need to hit Enable Editing to get the system to come up completely. And across the bottom, we've got the various components. So we can click onto instructions. There's some basic instructions there. There's links to the various components in the form, but we're going to work through those. So if you haven't used this before, you will get an idea. One of our subscribers has over 100 tradie businesses and uses this with every one of them. He's told us in a recent survey that our marketing consultant undertook. Let's go to the first calculation, which is the labour on costs. And I just want to go back to the beginning here. So within the labour on costs, we have set up a separate area for permanent full-time employees. You go through and enter in the yellow box here the type of classification of employee that has identical on-cost arrangements. So their annual leave's the same, 20 days. They probably no shift work allowance, their holiday pay loading, they all get the 17.5%. But if someone's any different, so if one category doesn't get the holiday pay loading, you would set it up in this next classification in A2 rather than A1 and type in the classification. And if someone over here is going to receive a shift work allowance, they'd be entered in A3. And again, you insert the classification. So what that's meaning is that, and when you've gone through the rest of these on-cost components, you are fitting a model to suit a particular type of employee, and you've summarized the employees in those boxes there. There's 6 of those forms available for permanent full-time employees. I hope that's enough. If you ever run out, please let us know. We'll add some more. We then go into the permanent part-time employees, basically the same. If there's a variation in the on-cost arrangement, you will just go into the next classification. You don't have to worry about it after that because it's all linked in this form. And there's 6 of those also. So we'll just flick through there. And then we've got the casual staff. And it's the same concept. So you might end up only using one in each of those areas, permanent, part-time, and casual, if they've all got the same on-cost arrangements. But if they're varying, you may have used a few of the total of 18 that you've got to give you that detail. We can then go to the labour budget. We'll just go back to the beginning. What the system will do is transfer out of the labour on cost details of the classifications. You can see we've got A1 for 6 potentials to be transferred. What you've got to do is insert the number of individuals. So if the first one here was a manager, you only got one manager, obviously you put one in there and you insert the salary, $95,000. But if you've got this next classification might be a leading hand and you've got 3 of them, obviously 3, and they're getting paid $75,000 each. The system then does the calculations that come across here. The next entry that you have to make is what is the client's expectation on productivity out of each of these employee classifications. And the productivity is very important. That's the stickable productivity percentage. In other words, what should be able to be charged to clients. I get a bit suspicious when people tell me 100%. I frankly do not believe that's possible. Even anything over 90%, I think is a bit suspect. So you need to make sure your client's giving you realistic productivity percentages. Preferably that's been proven on over previous periods of time. So those figures are then transferred into that system. We then have a separate chart for the permanent part-time. Same thing applies, just that in here, you will be inserting the gross hourly rate for those people and the calculations and productivity percentage. And then you have the casuals, all being supplied with the basic information out of the labour on cost calculations that I showed you a moment ago. The system will then calculate the total labour costs and will calculate an overall productivity percentage based on what's been entered. We've then got provision for a return on investment. You can set it up this way and it will link automatically. What's the net investment in the business? $500,000. What's the rate of return that the owner would like to get? 20% pre-tax. So the system would obviously calculate the target's $100,000 as a profit, and that's going to be reflected in the charge out rates. The next area that needs to be entered is the overhead costs. I think it's a good idea to list that out, those overhead costs. They will also obviously come into play in the predictive accounting side of this story, but that's going to be looking at when things are going to get paid and when the costs are going to arise and matters of that matter. But we end up with a total overhead expenses, and obviously this doesn't include any labour on costs because we've already factored the labour on costs into the labour budget. Budgeted materials is something peculiar to most tradies in that they buy goods in on using their own credit facilities, and they pay for those goods on behalf of clients. You need to determine from the client how much they think they're going to spend on that. $1 million, $2 million, $3 million, depends who they are. Might only be 100,000, but whatever it is. And are they going to implement a markup? And as I said before, be a bit careful when talking to your clients. If they tell you figures like 40%, make sure they mean it for every person that they're going to buy goods for, because you can find out that there's big mistakes made in this area. I don't think it'd be 20 million, Paul, but it will have some effect on the charge out rates. If you're going to write down and build any sort of provision in for write downs or write ups, you'd reflect it there. And what the system will then do is transfer in the figures as to what the total labour costs, including on costs are, what the targeted profit is, what the overhead expenses, and if there's any allowances for markup. So it's telling you what the amount of labour that has to be recovered is going to be in the budgets. The system will then do a time cost calculation. You don't have to worry about that. That just automatically happens as it's going through distributing over all your team members the various factors, and it also determines a business overhead factor, which comes into those calculations. What you will then get back is a list, which again is linked back to all these original reference numbers that were allocated back in the labour on costs, what the base cost is, the overhead factor, and that will then reflect a suggested charge out rate for that person. And we then get a proof document, which basically says, these are the people, there's the chargeable hours that we're budgeting for them, and that's the suggested charge out rate. And it will then calculate a proof document. The sales of materials are going to be this, the labour's this, any allowances for write-offs, there's the total sales, the material costs, which is these external purchases for clients, the labour on costs, the overhead expenses, here's the net profit that's been calculated, and here it is now compared back to that targeted profit, and you will find that it is very, very close, $10 difference or something like that. And so you've then got a plan for your client that you can show to them. There's also a long service leave calculation telling you what the rates are, because I never mentioned it back in the labour on cost, but you can set it up to include long service leave. So that's reflected in the system. So that's basically how this system operates. I should have asked before, if there is any questions, can you please send them through to me? I'm just looking now, I can't see any, but if you do have questions, and obviously we have people watching this live, if you're watching it later on at a time that suits you a bit better and you think of some questions, then please send me an email, peter@ess.biztools.com.au. If your questions on predictive accounting that Paul talked about, we will send it on to Paul, and we will get answers back to you. So what I want to do now, that's the overview of how the labour on cost product works. You have determined a report which is contained in that proof of charge out rate summary. You've got a report you can sit down and discuss with your client. And I'm just going to go back now to where we've talked about Paul. So we're now other services that you could offer as part of the Tradies package. I think it's very important that you look at the benchmarking.com.au reports. They've got reports now for over 250 different businesses. A lot of them are tradie or professional services firms. You could do a comparison then, looking at some of their figures, to have a conversation with your client based on the client's expectation of productivity, on the client's markup of external purchases, on the client's labour costs and their overhead costs. These are the sort of charge out rates that you're saying to your client, if they want to make their targeted profit, which in this case we said was $100,000, that's what they need to be charging. How do they then compare to their peers? Because sometimes you'll find there's some big variances. And one of the real problems can be the productivity figure. People are not getting the right productivity. So there's a conversation you have with your client. How come you're only budgeting for your tradie to get 55% when benchmarking.com.au is identifying that tradies in your industry are achieving 80%? And whilst I said before, be wary of someone inflating the expected productivity figure, it can just as easily be the other way, that for some reason, there might be some very bad work practices developed, or the tradies doing work that should be done by a labourer or a first-year apprentice. It can open up those sorts of conversations. And if you're going to be the key financial advisor to your clients, you need to have the information so you can argue the position, raise the position with some conviction. to say to the client, well, something's not lining up here. This is an independent report that says that the productivity for this type of electrician is, what did I say before, 80%, but you're only showing 55%. That variable of 25% is quite significant, obviously, in what the charge out rate's going to end up. So if your client's having trouble getting work, that might be one of the reasons. I think it's very important that, as Paul said before, that this is all now reflected into the budgets and cash flow forecasts, and that monthly financial accounts are prepared. Because the real service to a tradie client is then to keep them on the straight and narrow. You've established charge out rates for them. You've hopefully prepared budgets and cash flow forecasts and a projected balance sheet to show them where they might end up in 2 to 3 years' time. But the real proof is not leaving it for 12 months to get a set of financials, because if that productivity figure's gone haywire, or if the markup that they're reflecting on external purchases is nowhere near what they told you, or if their overhead expenses have increased, what it means is, in a tradie type business, their charge out rates are going to be significantly understated, and they will potentially have financial difficulties. And part of that is the preparation of a monthly key performance indicator report, which obviously looks at the productivity percentages. This is what we budgeted for the tradies. This is what we got. The variance is this. The cost of that is so many dollars. It's the sort of report that you would be preparing if you were the full-time accountant working for that client. So if you're running a virtual service for accounting, or call it chief financial officer, I think that's an important part of the reports that you have to submit. So then you can do a comparison of the actual productivity, the markup cost with the budget. So you have it so there can be an overall conversation. And I think all that should then lead into a monthly business review meeting. Andrew Geddes has spoken in this series of webinars a few times, and Andrew is quite emphatic that he believes the key to success, and he's basing this now on his great experience, having been the key advisor 30 years ago for the formation of Green Cross, the Australia-wide veterinary clinic business, and then for 10 years was their chair whilst they improved their performance to become a top 200 ASX company. Andrew has indicated that the key thing they did was imposed a meeting culture. They have daily huddles, 5 to 10 minutes of the leadership team and every other team in the business. They have a weekly team meeting, goes for about 25 to 30 minutes. But at the end of the month, they have these business review meetings. This is only management, not the directors. And from that, a report goes to the board of directors. But that business review meeting enables a full review of what's happened to be undertaken. One of our subscribers, I mentioned before, has over 100 tradies that he puts through this process. And he's told me that over and above the fee that they were traditionally charging for an annual set of accounts and a tax return, they now charge around $5,000 per client, per tradie client, for the preparation of the monthly accounts and the business review meetings. So they've generated an extra $500,000 at least in income. Now, some of our subscribers who have recently joined us have been asking how they can get started to start generating some revenue out of utilizing ESS BIZTOOLS. I think the first group you should start with is tradies. I think most accountants around Australia have got tradies. A very small practitioner rang me the other day and I said, how many tradies you got? And he thought about it and said 10. I said, okay, do you want to potentially have a target of immediately generating $50,000 worth of fees? He was quite excited about that. So it's a group like that that you can go to and talk and give them the information and show them that you have some understanding of what's happening in their industry, so that you can really be their key advisor on these commercial matters affecting their business. So is there any questions? I don't seem to have any. Paul, have you got any comment you'd like to make at this stage?
Yes, Peter, I'd just like to perhaps touch on your last slide where you were talking about the monthly review meetings and comparing your actual results from your monthly financial statements. I just wanted to add a couple of things. Looking at your very, very extensive calculations inside Excel, don't get me wrong, Excel does have a role in our commercial lives, and Plan Guru realizes that. And so it can link to Excel. So if you've got your Excel files where you've come up with the productivity and then the charge out rates and then a projected income, that can be linked into the Plan Guru budget, either as an annual attainment or it can be split up into months. The second aspect is, yes, of course, it is important to compare budget with actual. And that's why I get passionate about key drivers. If you've only got an overall dollar budget and you've only got a dollar actual result and one doesn't match the other, what went wrong? You don't know. Was it the number of hours? Was it the productivity? Was it the actual charge out rate that was applied? Was it somebody discounted? Those are all the KPIs. And all of that can be accommodated within Plan Guru, either directly into the financial statements with linked back to your Excel, or it has its own non-financial data capability. So I just wanted to touch on that because that fits very, very neatly with what you've just been talking about.
Yes, and we are going to do a separate webinar in a couple of weeks' time, I think, when it's scheduled, on professional service firms' charge out rates, but they're very similar to what we've just discussed. The only variance, I think, is we are not assuming that a professional firm is having a markup on external purchases. Some might, of course, especially when you get into engineers and architects and some of those types of firms. So you could use the one where the Tradies charge out rate we've talked about today, and also if you've got manufacturing clients, this one fits that category also. To calculate that charge out rate, but then it's important that you go to the next step and incorporate budgets and cash flow forecasts and the predicted balance sheets that Plan Guru allows you to do. I do have a question, I think. I just noticed that. My apologies. Oh, thanks you very much, Mark. We've got good presentation, very informative. Thank you. So thanks, Mark. It was very nice of you and we appreciate that. And hopefully everyone agrees. If you don't agree, also let us know, please, because we really want to get this so that you're getting the information that enables you to confidently use these services that ESS has produced and Plan Guru and Paul through Beyond Accounting Technologies have produced, so you can provide a service to your clients that is of a very high standard to convince them that you are the accountant that can supply these services. Okay, so I might just go back again, Paul, and we'll just continue on here. And and I've talked about the package fee, then I didn't bring it up on my slides there before. My apology. Okay, so you can join us for a webinar like this each week in July and August as we go through the components of the starter package, which I've said a couple of times today, is also the foundation of the gold and silver package. So if you're a gold subscriber, don't think that we're overlooking your requirements. A gold subscriber has all the starter package within your access materials. So, and we're going to start doing this type of weekly webinar for gold subscribers, looking at the rest of the package, nothing that we've covered in the starter package from September. Upcoming webinars. So on the 21st of July, which is a Wednesday, we have client mentoring and coaching, purchasing or commencing a business. I get the feeling that not many of our subscribers are really utilizing the client mentoring and coaching package. I say that because when I ask people to go and have a look at it, I get emails saying, geez, that's great. And it's been there for more than 5 minutes. And it's what it gives you is a series of material that we're suggesting you send to your client, someone who's thinking about purchasing or commencing a business, to convince them that they've made the right decision to go to you, but also for you to do a marketing presentation to them, in effect, as to the types of services that you can provide to them. I think that's very important. So we're going to talk about that on Wednesday, the 21st of July. And on the, oh, I thought we had another one there. Okay, we've only got that one listed. Okay, Wednesday, the 21st of July. We are presenting them each week, and there is a schedule on our website, the total program. To register, please go to our website and go down to the webinar tab, and you can register. So thank you very much for your support of ESS BizTools and ESS BizGrants. I noticed my question. No, there's no other question. That's the same one. Thanks, Mark. So to all of you, thank you very much. Paul, thank you for being with us today, sharing your expertise once again.
No problem, Peter.
And if any of you have got any comments or feedback or have some questions that you might think about tonight when you're having a quiet ale or watching Queensland try to beat New South Wales in that football match. I was born in New South Wales, so I'm starting to wear a blue shirt. See, I got it on today. No, I'm only joking. I didn't realise I had a blue one on until I sat down to start this webinar. And I looked at myself and said, oh, they'll say I've gone back to Newcastle. But thank you very much for your support. And for those of you who are in Sydney, Greater Sydney, we hope that you get out of this problem soon. We share your concern, and I know it must be very difficult for you servicing your clients in this environment. And if there's anything you think we can do to help you, please send us an email. But good luck and stay safe, please. Thanks, Paul. I'll talk to you later on. Okay.
Thanks, Peter.
Bye-bye.